Hello and welcome to the analysis of gold XAUUSD. My name is Vic. I'm the founder of Vikinsa Capital Management. Thanks for joining me here. Now, gold has been having very nice moves. Gold created this huge, nice bullish move and then started to take a little bit of correction from an FCP zone, which we discovered in the last analysis. If you missed the previous analysis, go and check it out. It's available on our YouTube channel here on TradingView as well, and also in our Telegram group. There's a free Telegram group which we run, and you will find the link to that in our description of this video as well. So it was already kind of like planned that the market was supposed to come to one of those levels and then start to take a little bit of correction, and we have been able to capitalize a lot on this in our FCP room as well. So what gold is going to do now and what can we expect? Let's see. Let's find out. Okay, so what we have is actually, if we start from higher time frame analysis, just to have a little bit of recap, you can always go back to my previous analysis. But what we have is simply like this. So on this time frame, on weekly time frame, what we have got is an M pattern which is forming, right? This M pattern does not complete here, right? Even though the market has gone up, it does not complete here. Remember, in the previous analysis I mentioned that this market is going up because of a demand zone here which is available here, but this M pattern actually kind of completes somewhere around here, somewhere in this in this region, near about 1580 to 1523, somewhere around there, right? More refined levels are available in premium analysis report that we generate. If you are interested in ordering one of that, you'll find a link in the description as well. So M pattern will complete around here. In fact, it can go beyond this. Why? Because now we have got a very bullish movement, which means that market has already eaten up a lot of bullish orders here, which means that gold can still fall back down, further down. But we trade what we see. So for gold to go bearish, first of all, it will have to come back down, and it will have to go through some of the levels. Then it will have to go through this support zone, and then only it will start to fall down. But there is still a possibility, and because I'm looking at weekly time frame, it may take months. Okay, so this is what we have here. Now if I go and look at the daily time frame, on daily time frame what we have is something like this. Remember, in our FCP methodology, we mainly focus on Fibonacci and WNM patterns, right? So what we have here is something like this. We have got a W pattern. Okay, and because of this W pattern, the market has started to take a little bit of correction here. Now in our FCP room also, I was telling other people, and there were few who were also had this concern that this correction is probably not the good correction. Why? Because market can still go slightly higher, just above that, just above the previous high here, and then start to take a correction. So that is still a possibility. So beware that the market has started to take a correction, but it may not fall down immediately. It can just come here or maybe slightly lower and then go back up once more before start to correct. However, if this previous high here, if this previous high, which is also the previous structural level here, if that gets broken, then gold can start to rise up, and it can go really, really high up, because we have few reasons there. First reason is that we have this area that needs to be cleared up at some point in time. Sooner or later it's going to get cleared up. Then we have few gaps available here in 1900 areas, so the market can actually go to those areas as well. So we trade what we see. So if the market actually goes above this region, and if we get a confirmation, then we will look for a long. Otherwise we are still short. We will, our bias is towards the bearish side. Okay, so if I open the analysis that we had, and this is what we were looking at. Okay, in the previous analysis, I gave you all these levels here, and the premium analysis members had clients had finer levels, but this is accurate enough, like even for public analysis. So here, what we have got is actually a triple bottom sort of thing. Now, remember, gold is one of those markets which creates triple bottoms, double tops, triple tops, those sort of things, and that basically is a liquidity area. Remember, we had one here, so the market went above this, collected all the stop losses, and it reached where? It reached a level here. So we had this FCP zone. Actually, let me start from here. So we had like this triple bottom here. Okay, the market created a very nice bullish candle. It stayed here in this zone for some time, then went up, stayed here in this zone for some time, then went to straight to the next FCP zone. There was some reaction here, but ultimately it reached this final level here, which is 1785. Now it is taking a little bit of correction here. What I'm suggesting is that it can still go back into this lower FCP zone or even higher FCP zone, and even beyond that a little bit before starts to fall down. So something like this can still happen on gold, so beware of that. However, if the market goes beyond this, as I said, then we have this area, and then we have a gap around 1857, then 1850, 84, and 1906. All these gaps are going to get filled at some point in time. It doesn't matter whether it's going to happen this week, next month, next year, next 10 years. We do not know, but at some point in time, the gold is going to come here to one of these levels. However, we trade what we see. So, if the gold starts to fall down, then what can happen? Then it can come down to the previous structure level here. Okay, that will be our target. Okay, obviously, if you have taken a short, then you will manage the position in the middle, because there are few structure levels here as well. If it continues to fall, the next level is going to be 1687 and 1680. Then we have this trend line which used to be resistance, so the market can push back up again into these structure levels again. And then if it continues to fall, then it will come down to 1643. Then it will try to target the liquidity below this triple top, and it will probably try to reach 1584 and 1522. Right, this is the FCP zone, this is the M pattern level, which I have already mentioned just a minute ago. And here there can be few very specific levels which can be included in your premium analysis report as well. So this is what we have here on the chart. Let's see what we have got on Vata and Visage as well. So if you already have Vata and Visage, or if you want to if you get Vata and Visage from Vikinsa.com, then this is what you can expect. So if I go to the monthly time frame, on monthly time frame, what's happening here is the market is still showing that this target here, this white dot, these white dots are targets. So these targets are still open, so the market can still fall down. Okay, now what we have is actually a bullish candle, which was kind of expecting. I was actually expecting it last month, but it did not happen. It's happening this month. Why? Because the market came through this water curve here, and that produces, it acts as a dynamic support and resistance, so it produces a opposite color candle. So that's what's happening here on the monthly time frame. If I go to the weekly time frame, on weekly time frame, in our channel and our FCB room, I also mentioned that the market was reaching this water curve, and it acts as a resistance and support. So the market came right into it and started to fall down. Okay, so this is what we have on weekly. If I go to the daily time frame here, on daily time frame, what we have got is actually these levels were met. So this was a buy signal, because this was blue, this is blue, and this target was met. This target was met, this has also been met. All of these targets have already been met, and the market is falling down from that level that we discussed in our FCP analysis. Now if I go to the H12 time frame, this is still open, so the market can still fall down a little bit, because um, we had a signal here. Okay, by the way, this is MT5 version, and right now we have MT4 version, which is available on the website. MT5 version is coming very soon. It's under testing and development. So, and then we have H8 time frame target, which is also open, so the market can still fall down. Okay, then we have H4 time frame, which can go up. Why? Because the market has just crossed water curve, which means that I can expect some bullish movement to the upside before falling down to this possible target here. So this is what we have on Vata and Visage, and let's go back to our analysis to conclude. Okay, so if the market continues to go higher, then what can happen? It can come to one of these levels, as I said, like here and these targets as well. And if it actually continues to go beyond this level, which is 1857, then the structure, the higher time frame structure will change as well. Okay, remember, so far what we have is simply still a bearish move. Why? Because if I show you this, what we have is like this: the market is going down and then we have a correction. So this is an impulse and this is a correction. Whenever the market will find an excuse, it will try to resume the previous momentum and it will try to do this and maybe like this as well, and that will produce a complex M pattern. Okay, so trade what you see, and hope this has been helpful. If you found it helpful or useful in any way, please make sure that you hit the like button, subscribe to the channel, and share it with other traders and trading communities because they will also benefit from it. And I'll see you in the next one. Have a great trading week. Thank you for watching. Find and follow us on these social media channels.